What is up, Bitcoiners? I'm excited to do another Bitcoin Magazine AMA. This time I am sitting with Chris Slaughter. We're both in LA, but I think we're obviously remotely chatting here.
Socially
Chris,
distanced.
yes, very socially distanced through Zoom. Chris, how are you doing? Welcome to this Bitcoin Magazine AMA.
Awesome. Good to see you, CK. Thanks a lot for having me. Doing as well as I can. Locked down here during COVID. We just announced a new product yesterday, and the reception's been great. So just staying focused and keeping busy.
Yeah, so I guess let's start with an introduction to who you are and what company you lead and what you guys just launched.
Yeah, for sure. So I'm Chris Slaughter. I'm the CEO of Level, and Level is a mobile Bitcoin exchange and bank account that is completely free to use. Our mission is to accelerate the world transition from dollars and fiat currencies to Bitcoin. And we think that that future is free. And that's why Level provides Bitcoin buys, sells, deposits, and withdrawals, all the features of Coinbase entirely for free. But beyond that, we also have a debit card that can spend cash from your Bitcoin with no transaction fees. We have premium chat-based customer support, and we have a automated trading platform like Betterment. So this is really about, it's about not just sort of dealing with excessively high fees in cryptocurrency, which I think are certainly a barrier to adoption of Bitcoin. It's about letting people go from just investing in Bitcoin to banking on Bitcoin, including direct depositing your paycheck, spending your Bitcoin as cash on a debit card. And that's the future we see, banking on Bitcoin with free consumer services.
Okay, so I mean, obviously a very different approach. I feel like a lot of the Bitcoin exchanges, for the most part, they've taken the approach of let's go with more of a like stock exchange type of a model versus let's go with more of a Chase Bank, Chase Mobile Bank in your hand or whatever, or some of these new fintech angles or business models. Can you talk a little bit more about your inspiration and why why Level is taking a different approach?
So Chris Anderson has this awesome quote, which is like everything that's digital is free, meaning that like if you can take a core service and you can deliver it in a digital format, eventually like price competition is going to drive the cost down to zero. The three different areas for consumer financial products are capital assets, stocks, banking, and cryptocurrency. If you look at banking and stocks, they've already been through this transformation. Banking started with transaction fees and then moved to monthly fees. And now, as you mentioned, it's all about the free checking account. Stocks used to trade with $5 commissions on E-Trade. Then Robinhood came out, and now everyone has transitioned to a commission-free model. And so it's interesting in cryptocurrency that you not only have this antiquated model of charging trading commissions, that they're substantially higher than were ever charged in banking or in stocks. And the reason exchanges can get away with that is that there's a perception that you're only going to trade when you're buying Bitcoin, then you're going to leave it for a while, and then you'll only sell it when you're done with it. And so people don't really externalize that cost and don't even think about it until the second that they're buying Bitcoin. And then, what is 2% or 5%, which Coinbase consumer charges relative to the overall price fluctuations? Over time, people are going to realize, just as they did in banking, just as they did in stocks, that these costs add up. The costs that Coinbase is charging at the consumer level are higher than the exchange rates between international currencies at an airport. And I think everyone's had the experience of like walking by one of those currency stations saying like, that's not what a dollar is worth. And it's simply inevitable that innovation in cost is going to drive those costs away. And so what Level's trying to do is start on the finish line and offer our services entirely for free. And that means no trading commissions like Coinbase, but also no hidden spreads like Cash App. And then beyond that, beyond just going with a free pricing model, to deliver services that aren't out yet, such as direct deposit, spending on a debit card.
So I mean, what would you say is like your timeline for people to actually use Bitcoin as a savings account, right? Because really the infrastructure in your model seems like it's tethered on, hey, I don't want to put my cash in a savings account. I'm going to hold it in BTC, but when I want to access it, here's all of the things I come to expect from, my Chase Bank, my whatever. But I'm using Bitcoin as the back end. Like, when does that become like saleable to not a hardcore Bitcoiner, not someone who's already made tons of money on Bitcoin and that's they're trying to spend it? Like, who's going to use this kind of banking services, and when do you think it's going to go mainstream? I know that is a multifaceted question.
So that's a multifaceted question. I think it's a good question, CK. And as I mentioned at the beginning, our mission is really to accelerate the transition of the world from traditional currency to Bitcoin, and that means you have to be able to integrate with legacy systems if you're going to help people transition off of cash onto Bitcoin. And so we embrace that from the get-go. While other cryptocurrency exchanges use corporate custody accounts, which allows you to store cash, but it doesn't give you things like direct deposit or remote deposit of checks. What Level decided to do was build a full cryptocurrency spot market and an FDIC insured checking account, like Chime offers, into one single product. And that means today you can direct deposit your paycheck to Level. You can make electronic payments and do automatic bill pay with Level. And from that same checking account that you're using for day-to-day checking, you can buy and sell Bitcoin with no trading fees. What the next evolution of that, now, so today, let's say if you use a credit card that's not on our platform, you actually can bank off that entirely. Just pay your credit card bill once a month with either a wire or an ACH payment from Level or an electronic payment. And you can just bank with us. You can get your paycheck sent to you, everything's set. We are, however, next year going to be releasing a debit card that can spend cash from your Bitcoin. And that really is sort of the keystone component. It's the final piece to fulfilling our mission that will let you bank entirely off of Bitcoin. At that time, you'll be able to set automatic policies that will take your paycheck and convert it right into Bitcoin. So forget about your checking account. And you'll be able to set policies that will spend Bitcoin to turn it into cash to spend on your debit card.
So, I mean, it sounds really exciting. I know that there's a lot of people that were like, hey, I wish I could just get paid in Bitcoin. With Level, like that becomes a reality. How would you describe like Level? Like when, and I'll try to describe it and you can tell me how spot on or spot off I am. But I kind of like see you guys as like, you guys are taking a challenger bank approach where you're integrating Bitcoin. Like, is that accurate?
Yeah, I mean, I think that's the most accurate long-term description of what we're building here, is that we are the first Bitcoin challenger bank, simply put. And I think sort of analogously, Amazon wanted to be sort of like the first great online retailer, but first they had to sell books, right? And so what we're focusing on today is disrupting the incumbents in the Bitcoin exchange business. Just like Borders was charging like $10 too much for Harry Potter, and it just made more sense to get it off Amazon, and that gave Amazon a good foundation, a good base of customers with which to build trust in other services. I think it's the same thing going on here. It's not Borders price gouging people, it's now Coinbase. And so if we can start by taking the most popular product in crypto, the most important product, the on-ramp, off-ramp, the crypto exchange, and we can take that from the most expensive financial product across all financial products today, and we can make it the least expensive, that's going to dramatically accelerate Bitcoin adoption and bring us a lot closer to our mission.
I love that. We do have some questions trickling in, but I do want to talk a little bit about your Bitcoin story. We had been kind of going back and forth on this before the stream actually started. But Chris, why don't you kind of walk us through when you started taking Bitcoin seriously?
Yeah. So as I mentioned before the show, I had a near miss in 2014 and like almost bought some Bitcoin, but I just didn't know enough about it. I really wasn't part of the cypherpunk scene. Like I had just sold a regular business. I wanted to invest in equities. I ended up buying Apple stock. And then like a lot of people, when 2017 came around, I learned a lot more about it. I got involved in crypto in early 2017. So I didn't get quite to the point of like, 2018 all time, like the sort of December 2017, January 2018, all time high, like real, sort of like FOMO remorse. But I did start getting involved in earlier 2017, still late to the party. I'll definitely say that. But what really got me sold, so the way I got hooked, name drop alert, I am friends with Bob Metcalf. He is from the same city. He is at University of Texas. I was affiliated with the University of Texas. And so we were friends, and I was seeing, in Austin. Yeah. So I was seeing all this news about like Bitcoin, like Metcalf's law cracks Bitcoin. Right. And like, I read that and that was all like horseshit. But I also like tripped over this, like the store of value hypothesis of Bitcoin. And that really resonated with me because from first principles, I'm like, okay, it has all the same properties as gold. Like it's not abundant, it's scarce, it's verifiable, it's fungible. So that's sort of all the same properties of gold that make it an attractive store of value. But then it had all these additional advantages, right? Like the eventual supply is known. It is decentralized in its verification. It's independently verifiable. And to me, I was like, okay, as a store of value, this is going to be a thing. And that's when I decided I wanted to like stop everything and work in crypto.
What do you think gave you the predisposition to even understand store of value? Like, what did you understand gold? What was your background there?
So, so my background's in applied mathematics. I studied undergrad and graduate in applied mathematics and electrical engineering. So I have a very like robotic sort of way of looking at things. And I always tell people that I like missed out on neural networks because there's a really good mathematical justification of like why neural networks like make sense. And I was familiar with it, but I was like, oh, that'll never work. And I did my graduate school in something else, right? And that was actually one of my big regrets. I know it's like has nothing to do with Bitcoin, but a big regret is I was like, I didn't think about this from first principles. Like you always hear Elon Musk talk about like a physicist, think about things from first principles. So after that, I was like, okay, I really need to stop and slow down and think about things. And so when I tripped over Bitcoin, I wasn't a gold investor. I didn't know that much about gold investing, but I knew that I needed to slow down, right? And so I was like, okay, it's like gold. Gold has some value. Then I was reading like John Greer and how like there's three asset classes. There's capital assets. There is consumable transformables, and then there are stores of value. And so I was like, okay, it's not wildly new. We knew about this in the 90s, and a lot of the technology was developed in the 90s too. So when I really slowed down and thought about it from first principles, like I basically happened upon that argument, which I made before your most recent question, which is like all the advantages of gold, which I think has value sort of fundamentally if you believe in sort of the John Greer school of thought of what store of value is, and a bunch of advantages further than that. So it seemed like a more than anything else an arbitrage opportunity. Here's something that like not everyone's into today, but it seems like it makes sense that it's gonna be the future. So like let's get involved and let's like ride this wave because from first principles it looks like this is gonna be a thing.
Yeah, no, that makes absolute sense. And I mean, first principles thinking, like Bitcoiners like really harp on that. So I feel lucky that I get to be here in the Bitcoin space and learn those lessons. So we have a question about your autopilot. We haven't really talked about the autopilot feature. So why don't you start by kind of introducing the autopilot feature and what it's made to optimize and how you guys kind of do that, and then we can get into the question.
So Autopilot is an automated trading account in Level that will trade assets that you add to the Autopilot account automatically with the hope of earning an income. And so you could think of that as being like really similar to Betterment. You put cash or stocks into it, it does the job of managing them, and you monitor the overall returns. Now, what's really interesting about Autopilot is the way that it makes money. Right now, there's a lot of buzz and a lot of movement around DeFi. And the main sort of killer app of DeFi is decentralized exchanges. Decentralized exchanges work by taking your assets, placing them in a pool of assets, and then pricing them so that you don't run out of either asset, which is going to cost things like the price of Bitcoin to go up if everyone's trying to buy Bitcoin at the same time. And then you distribute the income amongst participants, and that's how they calculate their APY or yield. That movement like really started in 2020 in a meaningful way. Like the ideas were out there, but constant product and Uniswap that came out in 2020. And what Autopilot is a centralized, decentralized exchange. And so I'm starting with a DEX because I know that's something that like people are going to be familiar with. But with Autopilot, it's the same principle.
Automated market maker. Is that
correct? It's an automated market maker. Yeah. So now a lot of people, market making is kind of a dirty secret of exchanges, right? Like when you go on exchanges, you assume that you're trading with like another consumer, but actually in 99.9% of cases, you're trading with a market maker. And market makers are people that just buy low and sell high on an exchange all day, providing liquidity to other users. And in return, they have better rates within an exchange that allow them to earn an income, which is what you see in the Coinbase Pro fee schedule. That's the market making business. Coinbase themselves is a market maker. On Coinbase Consumer, when you go to purchase Bitcoin, they grab some Bitcoin off Coinbase Pro, mark it up 0.5%, add a 2% trading commission, and then sell it to you. And so what they're doing is market making, but with their pro users' liquidity. But long story short, market making is a good racket to be in, right? It's a pretty proven strategy, like buy low, sell high. As long as you have real-time access to the price data of the exchange, it can earn you an income. And so what we did with Autopilot, just like DEXs have done this in decentralized exchanges, is we took market making and we decentralized it to our customer base. Now, we're on a centralized platform. It's not happening over the blockchain, but we're applying the principle that a community of asset holders can provide liquidity more effectively and at a better price than some privileged, like special market making firm in Chicago. And Autopilot is the way to provide liquidity on level. It is the only source of liquidity. And all spreads that are paid by consumers, as they would pay with Coinbase Pro, go not to level, but to Autopilot users. And that's what generates an income for Autopilot account holders.
Okay, so that's pretty interesting. It's not really a trading strategy per se. I mean, it's just automated market making.
Yeah.
So you have to have the premium version of the premium subscription to LVL to actually be able to be a market maker. Is that correct? Or Autopilot?
Yeah. So yes, you need to have the premium, but like the premium's like the best investment you're ever going to make in your life. First of all, like you go from email support to private banker support. So you have a dedicated contact that is familiar with your file. That's an Austin-based US banker that like knows you by name, that helps you with everything. Normally that service alone is something like $30 a month if you want private banking at JP Morgan, right? Putting that aside, we also give you 33% off network fees. So that costs us money because they're just paying the Bitcoin network. So you get 33% off that. We give you a black metal card that's a World Elite, so you can spend it with anywhere you want with no fees. And then you get Autopilot. And a lot of people that use Autopilot pays for their subscription. We're not ready to like release figures on like average returns of Autopilot, but more than 50% of Autopilot users over the last 2 months have paid for their premium subscription by market making. And so, premium is just a really good deal. I mean, if all that wasn't a good deal, I mean, like you're also just like supporting keeping Bitcoin free for everyone. So I think that signing up for premium is a no-brainer. I know you were like, do you have to have premium? And I was like, why wouldn't you?
No, for sure. I'm just trying to understand. So let's get to the question from the chat. Skid Hash is asking, Do you have any intentions of adding capital preservation logic in Autopilot? Watching gains run away makes me sad. So sounds like he may be already a user, Skid. So I guess thoughts on that question.
Yeah. So there's a white paper that we wrote about automated market making that really gets into the science of how it works. It uses something called stochastic optimal control, and it's known as sort of the optimum for market making. And the optimum for market making is not going to be the optimum for all circumstances. And so I understand that question, right? Like gains preservation means like, okay, the market maker did a good job, and I have an accumulation of assets, and like I want it to not sell that, or to take profit, right? And but at the end of the day, the role of the market maker is like not to be every strategy; it's to be the market making strategy. And we view market making as one part of a broader portfolio. You should hold Bitcoin for your net long position, and that's going to appreciate as more because of Bitcoin's inelastic supply. It'll appreciate as more people purchase Bitcoin and participate in Bitcoin. And then separate from that, you can have a autopilot position. And Autopilot makes money not on the appreciation of Bitcoin, although it can because it holds half Bitcoin. It makes money off volatility. As the price goes up and down and up and down, those are all opportunities for the market make to earn a spread, and then that spread compounds over time. So I think there is absolutely a role for taking your profits from Autopilot and then moving them to a long position. But I don't think that's by adding a bunch of bells and whistles to Autopilot. I think it's by making it easy for you to have the information that you might want to take profit, and easy for you to move the funds over to a net long position in Bitcoin. But Autopilot is not meant to be every strategy. It's meant to just execute a strategy that you select.
Okay, so Luis is asking, what innovation does your product offer, and how does it differ from others in the market today? I mean, I think we've been talking about that ad nauseum, but why don't you give the 5-minute elevator pitch again?
Yeah, I mean, like I'm not going to tire of answering that, like for sure. So look, like Level provides every capability that Coinbase provides for Bitcoin, Ethereum, and Litecoin. So you can buy, you can sell, you can deposit, you can withdraw, and we have a debit card. We're neck and neck with them. We'll see who comes out first. But different from Coinbase, which charges 2 to 10% fees, and for their card a 3% liquidation fee, we charge no fees. So the first innovation is that we have spent years building only the third vertically integrated US exchange other than Coinbase and Gemini, and we're giving it away for free. And it's genuinely free. There's no hidden costs like Cash App or BlockFi. It is just genuinely free. That's a huge innovation. But we're not stopping there. Beyond that, we're building the platform so that it can function not just as a cryptocurrency exchange, but as a personal checking account, whether you decide to hold your savings in cash or in Bitcoin. So that includes the free debit card, bank statements. We do your taxes every year. We have premium support, as we mentioned. We support wires. We support ACHs. Kraken doesn't support that. All on a no fee model. So it's not just saying like, okay, let's go copy Coinbase and make it free, although we did do that. It's about let's go further and build the next generation product that allows you to do anything you need to with your personal finances off of Bitcoin.
Awesome. So, I mean, I guess this is probably intuitive question that you get a lot, but how do you guys make money? How does Level make money?
Okay, so we the primary way we make money long term is we get paid by merchants when you swipe your debit card. And that we're not charging our customers. That is part of our agreement with MasterCard and with merchants like convenience stores and grocery stores that decide to take MasterCard. We earn income when you swipe your debit card, just like Chime does. Beyond that, there are a couple other ways that we make money. One that I already mentioned is Level Premium, which is a $9 subscription that provides a number of premium benefits. Another way is by lending provisional credit. So like BlockFi, we lend to our customers and we charge a fee to do so. But unlike BlockFi, which allows you to just take out a loan outright, what we loan on our platform is provisional credit. So on Coinbase, you can transfer funds over from a bank, and even if you buy Bitcoin, they're not going to let you sell it or move it at all for 5 days. That's because it takes time for the bank transfer to settle in such a way that it no longer can be returned by the original bank. So that's a fraud mitigation. We take that risk and allow you to access the funds immediately and buy, sell, whatever. In return, we charge a $5 fee. And so it's not a percentage. It's just $5 flat, and you don't have to pay it. You can just wait the 5 days just like you do on Coinbase, and that's free now. You just don't have to pay their fee anymore. But if you choose to use our provisional credit feature, it's $5 flat, and we make some money off of that as well. The reason that we are able to do that is we have such a tightly integrated system, owning not only the app, but also the spot market and building in-house our own anti-money laundering and identity theft controls, that our machine learning allows us to lend that out without running a check on your credit. We've been able to make those decisions correctly. And we've loaned out about $4.3 million of provisional credit, and we've lost $220. So we're really, really good at that, and we make some money off of it, but it's clearly a huge value to the customer because no other exchange allows you to do that.
No, yeah. I mean, that is awesome. I do know that at least Cash App, they do let you just pull the Bitcoin off. I'm sure that there's limits to what you can do, but you can just pull it off immediately. But I've always been like, in awe of how much risk they're taking. I guess they can just kind of foot the bill there. But no
I'd
other
have to check
exchange
that
even comes close to doing that.
I'd have to check exactly what the situation is with Cash App because there are types of transfers that you can access the funds immediately. For example, direct deposit. It's specifically if you are using Plaid to link to an external bank account and then you zoink the funds from the external account. That's the one where we're giving provisional credit, and people don't do that. If Cash App does that, I'd be like, if they just are letting people zoink it immediately, I'd be like very surprised, but like, I'm sure they have great engineers.
No, I mean, I'm zoinking it immediately, so I can attest to that. But also humble amounts, so I'm sure that they have some risk mitigation there. So I do have a quick question. Like, obviously, not your keys, not your coin is something that is very intrinsic to Bitcoiners. Level kind of is built on the assumption that you guys are going to be, or BitGo is going to be custodying funds that are within the Level account and are doing the autopilot and participating in these features. How do you kind of see that balance, and what's your general thoughts about self-custody versus third-party custody?
So our view is that the entire industry should shift towards self-custody, but we're not doing that now. And why is that? It's because beyond our mission actually within our mission of accelerating the mass adoption of Bitcoin, you face product trade-offs, right? Like you can't buy Bitcoin directly into your wallet unless you're willing to pay like 4.5% fees to services in today's environment, right? That's why platforms like Coinbase and Gemini and now us exist, because there are various regulatory requirements at the interface of crypto and cash. So within those constraints and wanting to deliver a product that can get more and more people investing in Bitcoin for the first time, this is the path that we have decided to go down for now. That said, where we can decentralize trust, we have done so because we do agree with that in principle, right? So our checking accounts, for example, other exchanges hold them in corporate custodial accounts, and ours are actually checking accounts within your name at a third-party institution. We can't even touch them. It would be a felony, right? And we're the only exchange that's like that. While on the crypto side, while we are doing a hosted wallet, we can't by ourselves sign transactions. It requires a second signer with BitGo, and they enforce what we call institutional policy controls. So we set a limit, like you can only withdraw this much, within an hour, and they enforce that to prevent like hacks and so on. So we've decentralized it to the extent possible. It is on our roadmap to do to make it easier to self-custody your coins. I think there will still be a role for hosted wallets because you can trade instantly and expect immediate settlement, but you should have a choice of how much money you want exposed to a self-custody wallet and how much you want to your exchange wallet. We are working on that. It may be a partnership or white labeled of another service. And it might be something we built in-house, but that's something that is important to us that is in our roadmap.
So just to clarify, theoretically, I could open the app. There is a hosted wallet, which is kind of like my exchange wallet and all that stuff. But there's in the future, there potentially will also be a self-custody wallet also right there. And you can maybe treat one like, hey, this is my in my investment account and this is my savings account or something like that. Is that kind of your vision?
Yeah. So like, yes, that's the vision. That's the long-term vision. But I think we should think about it this way for now. Like for Bitcoin to moon, we need people that like don't have Bitcoin yet to buy it. And those people are going to start with cash and need to buy Bitcoin. And they can go to Gemini, Coinbase, or Level with their cash to obtain their Bitcoin. We're the cheapest. We won't tax them at all. And then after that, if they want to self-custody, like be our guest, right? Yeah, I mean, like go ahead and self-custody. Like we think that we can provide such a good service that you'll like come back and use our exchange services. And over time, we hope to address making that experience even easier. But I can tell you today, it's easier than Coinbase or Gemini if you're starting with cash. And at least we let you do that.
Yeah. So just to kind of transition a little bit to some more questions, we have a question asking about the assets on the exchange. Right now, you guys offer BTC, LTC, and ETH. So I guess my question is, before the user question is, why altcoins at all? And do you see substantial volume in ETH and LTC compared to Bitcoin?
Okay, so we're a marketplace and we want to be fairly agnostic to like what we list as long as there is demand. Like imagine if NASDAQ was like, oh, we're just not going to list Apple because like we don't think Apple should exist or something. We don't want to be that company. So within the confines of securities law and what we're very clearly allowed to offer, we want to offer sort of what we can that there's market interest for. About 85% of our demand comes from Bitcoin, about 15% from ETH, and almost none from Litecoin and Bitcoin Cash. Shitcoins beyond that, like, are not like Coinbase got forced to list those because they're like market makers were going to walk to Binance, but I don't know. So few people trade them in the grand scheme of things, and like we don't want to expose. We're the app for mom and dad, right? Like we're for the next wave of people to get into Bitcoin. And those people don't need to be exposed to penny stocks when, like the gold chip, like crypto is like really the thing that they should be investing in. That's our view. I think it has downside for like the growth of the movement. I don't think it's like unethical or wrong to trade altcoins, like even on sentiment. I just think we're not the platform to it. And if you're interested in that, you should buy your like ETH like with us before you send it to Uniswap, like not Coinbase. But we don't care what you do with your own money. It's just not what our platform is for.
Okay, well, it sounds like there's obviously quality assurance, and you're trying to only confront or boil up the blue chips per se. But you're definitely trying to give choice as well. I do have so I guess just kind of on the altcoin question, what would it take for another coin to be added, to this? And I guess, do you have like any specific criteria?
Yeah, so we actually do have a listing process, and it's been in effect since we launched Alpha, which is out early access alpha. So like way back in the day when we were like only a crypto market, this was in place. Anybody can ask us to list something. We've had one coin get pretty close, actually. We basically apply the Howey test and then we look at marketplace health. So like we apply the same we apply the test for like whether something's a security. If it's a security, we're not the right place to list it. And about 2/3 of the coins on Coinbase are securities in our view. So there is a high bar for us. And then if someone can, if you can convince us that like what you have is not a security, then we'll basically just analyze the availability of liquidity, so that the coin's not prone to market manipulation, and then we would list it. We had had one coin get pretty close, but the problem with altcoins today is a lot of the innovation is around like delegated proof of stake and staking, like yield farming, things that like trigger the Howey rule pretty quick, or the Howey test pretty quick. And so that's not to say that we wouldn't list stuff like that in the long term. They just need to mature. For example, like the coin that we looked at, they were basically a commodity in our view, and we were really excited to see something that was a commodity, not a security. But the coin had a treasury, and the treasury was controlled by the coin creator, and that is characteristic of a security. So we had to pass. So we really do apply pretty tight standards.
So someone in the chat is saying adding Monero would be awesome. Any opinions about privacy coins?
We're pro privacy coins. I think the challenge with privacy coins, although some privacy coins are doing some things that that could force them to sort of close to being classified as security. That's not there's a lot of privacy coins that look pretty safe. It's just that's really just a function of marketplace health. A lot of the privacy coins are trading, like they're in trading volume and market cap are far behind Bitcoin Cash, and Bitcoin Cash trading was so anemic we delisted it.
So you will delist. Any chance that Litecoin gets delisted? I personally am not optimistic on Litecoin, but
yeah, I think there's a good chance that Litecoin will get
interesting.
delisted. Yeah.
Okay. I mean, I honestly think that's a very fair take for altcoins. And, as a Bitcoiner, Ethereum, there is legitimate volume and demand and value being had there. So, you have to kind of give a little bit. I'm kind of curious.
And Ethereum is clearly a commodity according to the SEC themselves. And also, in my view, it's not a clone of Bitcoin. It implements functionality that is orthogonal. I think of Bitcoin as TCP/IP, like most of your internet traffic is going to be TCP/IP, and maybe most of your blockchain activity is going to be payments for now. But like TCP/IP, there's also UDP. With Bitcoin, there's also Ethereum, and UDP for the internet traffic is sort of stripped down. You can do more with it, but it's sort of that's the networking equivalent of Turing complete, right? So Ethereum certainly, although you can do stuff in scripts with Bitcoin, it's wildly expensive. So Ethereum is a commodity according to the SEC, and it's doing something that's novel and different from Bitcoin. Whether that commands long-term value or not, we don't have a position on that, but it's clearly different and listable.
So I want to talk a little bit about some of the features that Bitcoiners are really going to be interested in. You already mentioned in the future being able to just deposit your fiat paycheck and then instantly have it converted into Bitcoin into your LVL account. Do you have any DCA strategies or any automated investing or anything like that? On the roadmap? That's
a DCA. What you just said, because you can invest your whole paycheck, or you could say I want $500 out of my paycheck, or you could say I want half my paycheck every month. That's a dollar cost averaging strategy. Yeah, we're doing this. What's going to happen is Autopilot today, it only has one strategy, and that strategy is market making. Autopilot is going to have a couple different, I wouldn't call them strategies, I'd call them automations. Like when you turn on your market making automation, it's going to take that account, it's going to market make with it. And we will introduce with Autopilot, we'll introduce something to manage dollar cost averaging. We'll introduce something to convert your paycheck. There'll also be an automation to make sure that you can spend Bitcoin on your debit card, cash for your Bitcoin on a debit card. That's why we call it Autopilot, not robo-advising, because it really is intended to sort of put you in the driver's seat of creating these automations for your account. That what we'll do at that time is there will be a bunch of standard automations, including what you described, DCA, your paycheck check conversion, the debit card conversion. That'll all be for the free tier. And then we'll move stuff like market making that's like more advanced. That'll basically be a premium feature within Autopilot.
Awesome. Awesome. Well, I mean, I have to say, I feel like I've learned a lot about Level, and I love the way that you guys are thinking about offering services on top of Bitcoin. It's very, very differentiated. I'm curious about two more things.
Yeah.
Obviously, things like BlockFi are very popular. People, if they are going to take custodial risk on their BTC or crypto, they are getting some sort of like interest. Do you have any plans on adding that kind of functionality?
Yes. So my problem with the way that those ecosystems are set up today is that there's a lot of like externalization of cost, and there are a lot of like internal, like a lot of like externalized or like hidden costs, I guess you would say. So like a lot of these platforms, it's like let's take platforms that let you like buy Bitcoin for free, for example. A lot of those platforms, I'm not being specific to anyone, but like a lot of those platforms, uh, 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 a lot of platforms, basically they charge the same fee or higher, but it's just baked into the spread, right? And then analogously, like you also see in like lending products, like a lot of the like lending products are like positioned as like earn up to this, but based on variable rates, and it depends on the asset. And then the origination cost like sort of like eats, the service charge basically like eats through like a major part of the interest. Like, and people's holding times are usually not as long as to even recoup that service charge. Another thing that's like this is the Coinbase card. The Coinbase card, it's like 4% cash back, but only on Monero and only for a month. And then otherwise, or wait, only on Stellar Lumens and only for a month. And then it's like 1% for other stuff. But also they charge a 3% liquidation fee. So it's like a freaking Bugs Bunny cartoon. They're like, you spend $100, they're like 3 for me and 1 for you. And then people are like, yes, I'm getting cash back. But really that's an example of like a complicated financial product designed to conceal costs. And I see a lot of those issues in sort of like crypto native, like wealth management platforms, and in like emerging debit cards. I think those services are really, really valuable. I think like our crypto spot market, we would wait until we could do a model that's like transparent and doesn't, and there are technical and regulatory challenges to this, but it's transparent and on our mission of sort of like being upfront and advocating for the customer in Bitcoin. I feel like I said way too much about that.
No. I appreciate it, and this is my last question, and then we'll wrap it up. But I guess in your mind, this is going to be a two-part question. But first and foremost, who is the ideal user in your mind for Level? And then two is what's your foresight or vision on the next 2 to 3 years and Bitcoin adoption in that time period?
So our ideal customer is like your mom. Like we would love for everyone in the United States to like be banking on Bitcoin, preferably with Level. And to get there, what we need to do is make the product easy enough that anybody can use it, like regardless of age, regardless of financial background or financial know-how, especially regardless of cost. Like we don't want to price people out of anything. You can, for every $300 you spend on the Coinbase card, you have to spend $10. It's like egregious. So like we want to get to a point where we build something for everyone. But Tesla didn't start out and say like, okay, well, we're going to launch the Model 3, right? Like they'd just be in a ditch somewhere. They built a product first for people that are true believers, for advocates that believe in both the cause and the product. And that's who we're going after first, right? It's the high value traders, it's the sophisticated people that want to go net long Bitcoin with their entire savings. Like we're going for the the maniacs right now, because those are the people that are ready for a product like this. But what it's going to take to get there is it's going to take us advocating. It's going to take more customers signing up, making it easier, improving the product, and really just sort of a broader push to make a product like this for the first time accessible to everyone. So to reiterate your question, like, I want everyone to use it. And I think what's it going to take to get there? It's going to take the people that are ready to use it now, like the trailblazers, the people that want to be pathfinders. Let's start with that, and let's keep making it better until we have a bank account that people trust more than Wells Fargo.
Awesome. Well, I think Wells Fargo is well on the way to ruining their own reputation anyways. So I think you guys potentially could be in a very good position. Chris, thank you so much for coming on to the show. Why don't you give your last word and kind of plug yourself where people can find you, learn more about Level?
Oh, okay, cool. So you can find us at lvl.co. Our Twitter handle is Bank with Level. Pretty easy to remember. Level's LVL. Bank with Level. You can find us on the App Store and the Google Play Store. Just search for Level Mobile Banking. And the last word is Bitcoin good.
Bitcoin good. Number go up.
Number go up. Bitcoin good.
Love it. Love it. Chris, thank you so much again. And yeah, let's stay in touch. I'm excited to see the developments happening with Level, and yeah, we'll be continued to cover it throughout Bitcoin Magazine.
Thanks so much for having me, and take care.